A wire transfer. $240,000 from the joint investment account we'd built together over 9 years of marriage. I read it twice. The transfer had cleared at 2:03 a.m. while I was asleep. I opened the banking app. The balance read $0. This is what a cheating revenge story actually looks like. Not a confrontation, not a dramatic speech, a number on a screen, and 9 years of work gone overnight. Ryan and I had built something real together. A consulting business, investment accounts, a house. When the divorce finalized 2 months earlier, the settlement had looked clean on paper. No children, divided retirement accounts. The house sold and split. He said he wanted what was fair. I believed him. The first warning came 3 weeks after the judgment. A login alert from our old investment account. Ryan had accessed it from a new device. I told myself divorce accounts take time to untangle. Access permissions lag. It happens. 2 days later, a second alert. This time the contact email had been updated. His address replaced mine. I opened the account again. No withdrawals, no transfers. Just that one change. That night I took screenshots. The transaction page, the contact settings, the authorization history. I still told myself it was nothing. Then the wire happened. I downloaded the transfer record and opened the activity log. That's when the pattern appeared. 3 earlier transfers, 10,000, 15,000, 20,000, spread across 2 weeks. Small enough I hadn't noticed. The final wire emptied the rest. Every transfer authorized with Ryan's digital signature, everyone going to the same destination account. I called the brokerage. The representative told me the account was still jointly authorized. Either party could move funds. When I asked when the authorization settings had last been changed, he checked. 2 weeks earlier. 2 weeks before that, Ryan's attorney had requested a final copy of our settlement documents. I opened the divorce agreement, all 83 pages. I read them slowly. Then I read them again. The investment account was listed under assets scheduled to transfer to my sole ownership, but the document described the transfer process, not the deadline. The paperwork to remove Ryan hadn't been filed yet, which meant he still had full access. He hadn't made a mistake. He had waited. The email change, the small withdrawals, the 2:03 a.m. wire. He waited until the divorce finalized, then drained the account before ownership changed. I didn't call him. Instead, I opened every document connected to the divorce, settlement schedules, property disclosures, asset lists. Somewhere around page 47, something stopped me. An empty line where an asset should have been. I searched the document for one word. Our company name. Nothing. Ryan and I had started the consulting business 6 years into our marriage. 3 years before the divorce, we restructured it for tax reasons, placed it under a holding structure. Ryan never handled the filings. I did. I opened the state business registry and typed the company name. 2 names appeared. Mine, managing member, 70% ownership. Ryan, 30%. I reopened the divorce settlement and searched again. The company wasn't listed anywhere. Not in assets, not in disclosures, not in distribution schedules. Ryan had divided the bank accounts, the retirement funds, the house. but the business itself had never been included. It still existed exactly as it had before the divorce. The ownership record hadn't changed. I sat there doing the math. Our consulting contracts generated around $80,000 a month in revenue. After expenses, the business cleared roughly $30,000 in profit. Ryan had taken the liquid money, the accounts he could see. But the business itself was the real asset, and those documents had never changed. I didn't confront him. I called our accountant and requested updated financial statements. Then I contacted the attorney who had helped us form the company years earlier. He reviewed the ownership filings that afternoon. Then he asked one question. Was the company included in your divorce settlement? No. There was a pause on the line. Then legally, it wasn't divided. The next steps were procedural. We reviewed the operating agreement, confirmed the management structure, updated the corporate banking authorization. Within a week, the company's revenue account moved to a new bank. Only 2 names remained authorized, mine and the controller who handled invoices. Ryan's access disappeared. 2 weeks later, he noticed. His call came on a Thursday afternoon. He sounded confused more than angry. The client payments stopped showing up, he said. I told him the company accounts had been reorganized. There was a long pause. But that's our company. I opened the state registry page while he spoke. Then I sent him a screenshot. Ownership structure, 70% managing member, 30% passive partner. His voice got quieter. 2 days later, his attorney contacted mine. They asked to review the settlement, specifically the missing asset. But the paperwork said what it said. If an asset isn't disclosed and divided during a divorce settlement, the court doesn't automatically redistribute it later. Ownership remains as originally filed. Meanwhile, the company kept operating. Clients renewed contracts, invoices cleared, revenue flowed into the new account structure. Ryan still technically owned 30%, but operational control belonged to the managing member, which was me. About a month later, he sent a short message. He wanted to negotiate. His tone had changed. The investment account he emptied had totaled just under $285,000. The consulting business generated more than that within a single year. Eventually, we reached a simple agreement. Ryan kept the money he had transferred. I kept full ownership of the company. No hearings, no courtroom arguments, just signatures on updated documents. The last thing I did was open the state business registry one more time. One name remained. Managing member. 100% ownership. Mine. The part that stays with me isn't the money. It's that he assumed I wouldn't read all 83 pages, wouldn't open the registry, wouldn't notice what was missing from the asset list. Ryan thought the accounts were the real prize, the liquid money, the numbers he could see. But the asset that mattered had always been sitting somewhere else, in a filing he never thought to look at, in documents that had never changed. Most people in these situations don't look that closely. That's what makes it work so many times before someone finally does.